I'm with Julian Biggins, Joint Chief Executive, MA Financial. Julian, thank you very much for participating in the Inside Network's Alternatives Symposium, Hunter Valley.
Thank you, James. Thanks for having me on board.
It's a great pleasure to have you here. Now, Julian, what key factors make alternative or operating real estate assets attractive at the moment compared to core or traditional real estate sectors?
Yeah, it's a great way to start, I guess. When we think about real estate, we think about a funnel, and we try to get as many real estate opportunities into that funnel as possible to look at as an investment opportunities. I guess real estate at the minute, we like to think about real estate as the land, and we like to land bank real estate. And then what's really important is supply and demand, and also generating as high a cash flow that you can off that land whilst you own it.
You highlighted that valuations can often lag behind current market conditions, particularly in real estate. How does that affect your approach to acquiring assets, and what opportunities are you seeing at the moment in more undervalued areas of the market?
Yeah, I think it's a really interesting time to invest in real estate. I think if you read the press, if you listen to a lot of the noise in the market, they're talking about valuations that may be coming down. Now, the thing about valuations is they do lag, and the valuations that we're seeing at the moment reflect historic transactions. What I'm really interested in is finding things that are, priced for today's market. And if we can find that, we're often buying things 30, 40% discounts to the peak valuation. When I say peak valuation, that's really last cycle valuation, or we're buying them at 30 or 40% discounts to replacement cost. And that, we believe, reflects really good buying terms in real estate.
With rising construction costs and interest rates, how are you navigating those challenges to identify assets that offer both potential high yields and downside protection for investors?
Yeah, I think, and I've been in the real estate game for 25 years, I've never seen a cycle that's similar to today. You've seen interest rates move up about 425 basis points, which is a very significant shift from 10 basis points probably 4 years ago. But at the same time, you've seen a 30-35% increase in construction costs. So what the dynamic we're seeing today is really there's very little supply opportunity in terms of real estate markets. So when we're looking for opportunities, we're trying to look at areas that have great demand for real estate. Things like residential is a very good market, but very hard to invest into through institutional money. We look at our marinas, retail shopping centres, accommodation hotels. Tourism Australia is still the lucky country, and we love that dynamic. So, they're the things we're trying to find when we're looking at opportunities, and we think construction costs have really embedded the ability to see very little supply for a long time.
Institutional interest in alternative real estate investments, you alluded to that. It's growing, and that's one of the influences that's leading to cap rate compression. How do you view the long-term impact of this trend on returns and sector stability? I
think it's a real opportunity. We've seen a few sectors. We saw self-storage, we saw childcare, land lease communities. These are sectors that, 5-10 years ago, you could have bought these assets on a 9% yield. Today they trade on probably 6%, and there's a real significant shift in that valuation equation because institutions are starting to lean into alternative real estate. And things, again, like we see opportunities in the marinas where we've bought them on a very high yield, and if we can institutionalise that product, we can really benefit from that uptick.
The economy, of course, stands behind all of this. So given the current economic conditions, including supply constraints and inflation, which real estate sectors do you think are best positioned for growth over the next decade, and why? You've mentioned, obviously, you like marinas.
No, I think I'd frame this a little bit differently. I think real estate's a great place to invest money at the moment. Because of the construction costs, the supply side is very fixed. The thing you've got to find is what I'd call a motivated vendor, or a vendor that's willing to meet the market. Most owners of real estate in this market are pretty well capitalised, so the banks aren't forcing them to sell their assets. But if you can find a motivated vendor that's willing to accept today's terms, we think that the price that you're getting in on will underpin returns for a very long time. And the only point I'd make there is that real estate's not a 3-month investment. It's a probably 5 to 10 year investment, and you really do need to ride through the cycle, and that's why we think it's a once in a cycle opportunity to invest in real estate.
Julian Biggins from MA Financial. Julian, thank you very much.
Thank you, James.